This is a Yahoo Finance special, Crypto in 2023. Prices of cryptocurrencies are surging this year. Bitcoin is up around 40% with other popular digital assets like Solana up even more than that. That's a big turnaround after last year's crypto crash when the speculative bubble burst as the Fed spiked interest rates. Now, investors are hopeful for a hot crypto summer in 2023. But there's a lot still weighing on the sector. The Fed's aggressive rate hikes, a slew of bankruptcies, the aftermath of the collapse of FTX, and the criminal case against dethroned crypto king Sam Bankman-Fried. Over the next hour, we'll examine the future of crypto, including the best trading, investing, and tax strategies. And the big question, what will take us to the next crypto bull market?
Hello and welcome to this Yahoo Finance special, Crypto in 2023, brought to you by Intuit TurboTax. I'm Rochelle Akufa alongside Brad Smith. So, of course, after a tumultuous 2022, three key themes are unfolding in the early part of this year as investors continue to pick up the pieces of a tarnished sector. Now, firstly, the regulatory crackdown is gathering pace. Crypto firm Paxos ordered by a New York state regulator to stop creating new coins for Binance's stablecoin. Now, this as it reportedly faces a lawsuit from the SEC for offering the coin in the first place.
The prevalence of stablecoins continues to be a theme that we're watching, whether it's fiat-backed stablecoins or the algorithmic versions. The fiat-backed type are expected to continue to dominate developed markets. As ever big issues as either there is lack of any clear, coherent regulation here, Rochelle.
And we know that's putting a lot of people off doing what they do with exchanges. So finally, storage, of course, then becoming another key area. Security, obviously top of mind, but the type of facility you use will be based on your individual needs. Now, hot storage is an app connected to the internet, while cold storage is done offline.
Now, crypto didn't have much in the way of winners in 2022 as exchanges and currencies folded following exchange collapses and an investor pullback. So let's look at the survivors and losers last year and look ahead to this year as well. We've got Yahoo Finance's Jared Blickery here with us in studio. Jared, take it away.
All right, well, let's think about the last few years. We've had some incredible gyrations in the risk markets, and crypto has been really leading the way. So I compared the 2022 returns to the 2021, 2022, and what we have so far this year. Now, 2020 was the beginning of the pandemic. We had that huge bear market in stocks, and you take a look at what happened here. We had a pretty big dip in Bitcoin prices, but then towards the end of the year, we had all the stimulus unleashed by the Federal Reserve and also the fiscal agents of the U.S. and around the world, and we saw this huge rise. Well, that continued in 2021 in this little cyan line here. And in fact, a lot of prices peaked not only in the early year, but in later in the year as well. And so crypto didn't have quite the year, at least most of the tokens didn't have quite the year as 2021, but 2020, but 2021 ended up being a pretty good year. Now, 2022 is when the rubber hit the road, and of course, that was when we got that huge bear market in the U.S. and stocks, and we also had central banks around the world suddenly get hawkish. And here we can see in this orange line, boom, we hit some really low lows. And of course, we know what happened with the FTX bankruptcy. Before that, we had the Celsius fallout. Suffice to say, retail traders really were the big losers last year, in addition to all the people and entities we see in bankruptcy court. Now, take it to 2023. Guess what? This little red line here, let me clear all this noise here. We do have Bitcoin up about 30% for the year and Ethereum up about 20%. So let's take a look at our heat map here and track some of the winners and losers. There you see Ethereum up 23%. Now, if I change this to a one-year view and sort by performance, we're going to see a lot more red than green. And some of these have lost almost all of their value, and some of these we've also taken off the board. But you can see FTT token down 96.5%. What I find remarkable here is we were just talking about the Binance token. We've seen this retain and be very close to its stablecoin value of 1%. We haven't seen that many fluctuations over the last year. So the news apparently not affecting this tape. But some of the winners and losers here, you take a look at Ethereum down 48%, so is Bitcoin over the last year. People might be surprised to learn that Dogecoin is only down 45%. So Dogecoin, the relative outperformer despite its joke inheritance there. And then just taking a look and thinking about who might survive this year, who are the winners going to be. I think it's been shown that Bitcoin and Ethereum are here to stay. We've got some other tokens, Ripple, for instance. I don't know what's going to happen with the SPF favorites like Solana and some of the others. Solana down 78%, but those are going to have a lot more work to do. So it looks like things are improving right now. We do have liquidity flows into the market. We've seen stocks rise this year, but really Bitcoin has been leading the way for stocks. They've been wagging the tail. So whenever we get one of those big announcements, and I'm going to be watching CPI this week, guess what? I'm going to be watching Bitcoin over stocks, guys.
Certainly, we have seen that correlation get a lot tighter between Bitcoin and inflation data. Jared, great stuff there. Well, with the market still looking for a thaw in the crypto winter, let's look at what investors are watching for 2023. Joining us now, two Wall Street and crypto veterans, Caitlin Long, founder and CEO of Custodia Bank, and Jan van Eck, Van Eck CEO, and of course, Yahoo Finance's very own David Hollerith. A big welcome to all of you. So first, I want to start with you, Caitlin, because a lot of people, they're seeing, especially this rise that we've seen in Bitcoin, but what does the landscape actually look like right now when we go sort of beyond a lot of the noise of the headlines?
Well, there's certainly a lot of optimism in emerging markets where adoption is propagating both of Bitcoin itself and the Lightning Network, which is a layer 2 solution for small value payments that is propagating at a rate that is greater than the rate of stablecoin growth. And what's interesting about the Lightning Network is any currency in the world can be transacted on that one just simply by locking up the amount of Bitcoin to collateralize it. And so this is essentially a means by which the emerging markets are getting access to US dollars without touching the US banking system. There's a lot of reason for optimism there. However, in the US markets, as you have correctly pointed out, there is a regulatory crackdown underway.
Jan, yeah, and that's a good point. Van Eck is a large investor in emerging markets. It also has a Bitcoin price target for $250,000 as of 2028. So with that, I also wanted to point out your outlook for 2023 is that the markets are going to be a bit sideways, mostly for equities has been generally what it sounds like you're saying. So I was curious, thinking about that in retrospect, do you expect Bitcoin's trajectory to follow that of equities as we've seen in the past, or what's your expectations for it this year?
Actually, no, is the short answer. And I would say, yes, that's a long-term price target for Bitcoin. And I derived that really by saying that Bitcoin could achieve half the total market cap of gold. Both gold and Bitcoin really trade against the Fed. So when the Fed is super tight, like it was last year, those are difficult times for both assets. But the reason I'm cautiously optimistic this year for Bitcoin is because at some point the Fed will stop tightening. And we also have the halvening, which is expected in May of 2024. So I think at least in the second half of this year, it will look really rosier for Bitcoin. Now, if I may really quickly, we've had this spurt in the Bitcoin and risk-on assets earlier this year. And our basic thesis is that's come from a surprise increase in global money supply that's happened mainly out of Asia in the last couple of months, and I'm happy to talk about that.
We will come back to that in a moment. Caitlin, I did want to get back to you for a moment, especially considering your platform. You are regulatory compliant. You have transactions across digital assets and traditional financial systems. However, a lot of people who may be looking to get into crypto, they are looking for that insurance that they can kind of count on. And so when you think about the runway or the timeline towards having crypto assets federally insured, what is that kind of base case build in that you and the team think about?
Oh boy, federally insured is not on the table. In fact, it's actually the opposite. And to be clear, Custodia Bank is not yet taking customer deposits. We are building. And with the regulatory environment in the US so fluid, a crackdown started with the White House, the Federal Reserve Board of Governors, and the Kansas City Fed, all on Friday, January 27th, where there was a movement against Custodia Bank to deny our membership application to become a Fed member bank. Subsequent to that, the OCC has taken action. Now, last week, the IRS and the SEC, there's more SEC action coming up this week. So the notion that these assets will ever be federally insured is in fact quite the opposite. There is a crackdown trying to go after stablecoins, trying to debank the industry, and trying to clarify the magnitude of unregistered securities in the industry. We're finally getting clarity, the regulatory clarity that this industry has begged for really since I've been involved, which is more than 10 years now. We're finally getting some clarity from the US regulators. And boy, have there been a lot of activities that have been, shall we say, of questionable legal authority and jurisdiction by the agencies in Washington, D.C.
Yeah, and Caitlin, just to add to that, there's obviously a range of enforcements that have been happening. But if we just focus on Custodia, why do you think the Federal Reserve decided not to allow Custodia to join as a member bank?
Well, it talked publicly about the novel and unprecedented activities, and Custodia has proposed to cut those out of its business plan. Again, everyone's trying to figure out where's the line here. And is the goal of the Biden administration, again, this is White House led, is the goal of the Biden administration to choke off all crypto across the board, period? Or is this really just about stablecoins and unregistered securities? And Custodia Bank, I think, we were the first to be targeted in this wave. It's now clear that the wave is quite broad and quite deep. But the interesting question is, if you look at the wave that's taken place, it's debanking the industry, it's cutting off stablecoins, fiat-backed stablecoins, and it's also clarifying unregistered securities. Custodia fit into those first two buckets, a bank serving the industry, it proposed in our business plan, as well as issuing a US dollar stablecoin-like instrument called Avid. We have cut that out of our business plan. And so potentially they shot the stallion to scatter the herd, so to speak, as we would say in Wyoming, in part because we actually fit into two of those buckets. The real question at this point for the industry becomes, how far is this debanking wave? Is the goal of the Biden administration to completely debank the industry, in which case the entire thing moves offshore? But because, of course, this is internet native money, it won't go away and people will still continue to use it. Or is the goal really just to go after stablecoins and unregistered securities? If it's the latter, then as this shakeout takes place, there will be, I think, phoenixes emerging from the ashes, so to speak.
And so then, Jan, for retail investors who really saw some heavy losses here, we're also though still seeing institutional investors perhaps still taking a different route as we're seeing retail investors pull back. What is the end game here, do you think, for some of these institutional investors when they look at the road ahead right now?
I think institutional investors, frankly, are still licking their wounds after last year, and might be opening their eyes to crypto, but not doing anything meaningfully this year. And I don't even think retail investors have gotten that involved either so far. I think why are we here? We're here. Crypto has the opportunity of cutting the costs of the financial system by maybe 90% to the consumer. And as Caitlin was talking about, overseas, it gives a lot of people who need access to a stable unit of value like the US dollar, access to that if you have a cell phone. And so there's a lot of good end that can bring to users around the world through crypto. But boy, the regulators are really shooting a lot of horses, to use Caitlin's analogy, recently here in the United States. What does that mean? I would add one other observation, which is not only does it move activity offshore, which is the reason FTX was in the Bahamas in the first place, but it is also pushing a movement towards decentralization.